This week, we learned an iconic company that's more than 75 years old could go out of business. Tupperware says there is substantial doubt about the company's ability to continue. Joining us now is Bruce Allen of Bruce G. Allen Investments. Bruce, Tupperware stock is tanking, and this news came out in a filing. Can you talk about these filings and what they can mean for stocks in general?
So every company that's publicly traded is required to file reports with the Securities and Exchange Commission about a variety of things: their quarterly earnings, their annual reports, any events that could potentially impact the company's future.
Okay. Tupperware, apparently, they didn't file an annual report for 2022. Why do companies have to file these reports annually, and what happens if they don't file these annual reports?
They're required to file their financial information annually. Their deadline, I'm not certain what the deadline is about that in Tupperware's case. And as far as not filing that, we're going to find out, because that's something that doesn't happen very often.
I know in the stock world, and I'm not an expert here, but I know in the stock world, these annual reports can tell a lot about a company. What can they tell us in general about a stock?
Typically what you're looking for, especially in the annual reports that are reported to the SEC, so there's two annual reports: the ones that come out with the pictures and the glossies that people get, and then there's the second one that that companies file with the SEC. The SEC and the company's annual reports that are sent out are delineating what the company's financials look like, what their revenues are like, how their earnings per share is, how their debt is, how the company's doing, what their strategies are, and things of that nature.
So it can be very telling of the health of a company then?
It's very helpful. It's very helpful for analysts to understand what the company's doing, and those reports reveal a tremendous amount about the company.
Okay. In this case here, Tupperware stock has fallen 98% in the last year. When a stock falls that significantly, I would imagine that's a pretty big indicator that this company is failing and is not going to survive. Is that a fair analysis?
I think that normally what you would say is there's green lights, yellow lights, red lights. That's at very least a very significant yellow light, potentially a red light. Companies sometimes come back from this, so you can't. It's not 100% in the stock market, but it's definitely a sign that there's some significant problems, and investors have given up faith in the company. How they manage through that's going to determine whether the company can rebound or recover or not, and that's the critical question now.
Do you recall any cases in your experience where a stock has fallen this much and a company has been able to bounce back?
Sometimes, yeah. I can't give you the exact examples, so it's not 100%, but normally if something like this happens, a lot of people are looking at saying, hey, this is a concern.
Yeah, big concern. All right.
Yes.
Bruce Allen, thanks for joining us here on 9 News
Thanks.
this morning.